Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, and it's about 9 a.m. As I report to you on the trading floor, coming to you on June the 5th, June the 5th today, as we look at the markets and the influences. We really saw a boost this morning overall in the markets early this morning when reports came out that President Trump and President Xi of China were having a conversation. That call, according to Chinese state media, was initiated by President Trump. They wanted to make sure their people knew that President Trump was asking President Xi to be able to talk. It's interesting how we set the stage for this conversation. And if we look at yesterday, President Trump posted on social media this. I like President Xi of China, always have and always will, but he is very tough and extremely hard to make a deal with. That's what he posted. Now, I'd see a couple of reasons for that statement overall. Number one is to kind of lower any expectations that might come out of a phone call. And the other is to convey respect to President Xi. Overall, when you look at the Chinese culture, they value respect, and they can do a deal with their opposition as long as there is a relationship of respect there. And we saw that during Trump 1.0. We saw that in the Lake Geneva meeting, I believe, in my opinion, that was what helped us reach a 90-day rollback in tariffs and some other factors in there on May 11th at Lake Geneva. So that respect aspect is very critical to negotiating with China. Now, the two presidents have very different views on negotiations. President Trump has shown that he likes to be directly involved in negotiations. He has inserted himself in negotiations a number of times. That's something that he loves to do. President Xi, on the other hand, wants all the details to be worked out at lower levels, and then the heads of state meet simply to sign the agreement, whatever that is. So they have two very different philosophies. Now, I still warn you to be wary of expecting an agreement, a broad spectrum overall agreement solving all the problems between China and the United States anytime soon. I just don't expect that. There may be a series of these agreements like what we saw on May 11th periodically. And I think China will see that as a way of dragging out the process. With some of its reports in state media, it seems to be preparing its people for a prolonged negotiation process. Why would that be? Is China not hurting? Yeah, they're definitely hurting. They're feeling the pain. They're seeing a backup of electric vehicles. Electric vehicles are being sold sometimes domestically, sometimes in the used car market at 30% discounts just to move them. So they're going to the state is now looking at factors to slow down the production of those vehicles. That slows down manufacturing. So overall, they're seeing some of those problems. The Dragon Boat Festival that was just held saw a slowdown in consumer buying and participation versus what was expected, even coming in about 13% lower than it was pre-COVID in 2019. Consumers starting to pull back their buying. And that's a problem when China is trying to shift their economy from an export-based economy more toward a consumer-based economy. So they are hurting. But at the same time, President Xi continues to have good popularity inside of China because based on what the Chinese people are being told, where they control the message, is that it's the United States that's been using unfair trade practices and has been for years. And the United States has been to bully. It's the United States that's declared war on China. And they see President Xi as the only world leader willing to stand up to the bully, so to speak. And so he still has that support, and he doesn't have to worry about re-election. On the other hand, he knows that President Trump has limited time in order to reach his objectives. President Trump, in fact, himself, I think, is assuming he has to do everything in 2 years just in case he happens to lose the narrow lead that he has in Congress. So that's a concern. President Xi can feel like, with all the legal challenges and other things against President Trump, if he just waits and drags this out, perhaps he can come out ahead and not have to give up anything in negotiations. So that's part of the issue going forward. Now, we did see an increase in tensions that we've had as President Trump has accused China of violating the May 11th agreement. He didn't get specific in public, but it's widely being said that it was likely because of China's hold on rare earth minerals, that apparently that agreement on May 11th had assurances that China would start opening up exports of rare earth minerals. Those rare earth minerals are necessary for the production of automobiles, military equipment, and other electronics. And China has really been tightening down its export of rare earth minerals. Now, rare earth minerals can be found in many parts of the world, but most other parts of the world have restrictions on their mining and processing from environmentalists. And so, therefore, China holds the big grip on the supply of rare earth minerals. Now, previous until recently, a lot of rare earth minerals came out of China on the black market, illegal smuggling, illegally being smuggled out of China. But China has really cracked down on that and made it difficult to smuggle out rare earth minerals out of China. And now what sources are saying is that Chinese authorities are requiring those who do buy rare earth minerals to heavily document what is being produced, who is buying it from them, and even show pictures of the products being produced. Basically, a significant intelligence gathering mechanism that would allow China to further tighten down and restrict where rare earth minerals go in the world and for what it can be used, keeping it away from military applications, and to where China would have the rare earth minerals for military weapons production, but the rest of the world would not. Now, in the end, this means that it starts getting the rest of the world to start thinking, where are other sources of rare earth minerals? That's one of the reasons that President Trump has been making statements about wanting to work out some type of agreement with Greenland, where rare earth minerals are present. Also, Ukraine has a lot of rare earth minerals. He wanted to find a peace treaty there, and that would involve U.S. having access to the rare earth minerals in Ukraine. But Russia has since stepped up the war and said, no, we're not going to negotiate. They are not publicly saying that, but that's what they're saying by their actions, that they have no interest in peace. And that all they seem to be really interested in peace prior to Xi Jinping making a visit earlier this year to Moscow. And since then, they've taken a different approach to the war and have become even more aggressive, as have both sides been now. And so that war stepping up is keeping us from the rare earth minerals in Ukraine as well. So much of this is now becoming about rare earth minerals, and that is one of the big sticking points where China seems to have a leverage point now. And President Trump is wanting to see some movement, and perhaps he ends up giving on some other things that were critical. So all of this is an escalation right now between the East and the West, as you have Russia and China working together, along with Iran and North Korea. We have North Korean troops actually on the ground in Ukraine, helping to fight the battle for Russia. So those four countries really working together now, in trying to reach this kind of control of the West and being able to limit what the West can do. Also, with the war in Ukraine continuing, we see that limits Europe and the United States being able to devote military assets toward protecting increased activity in the Indo-Pacific region as well. Now, if you look at the Ukraine war, we have seen Ukraine make a couple of major strikes on Russia. On Monday, I talked in my video about the strike that they had made deep inside of Russia at 4 different military bases, where these aircraft that carry the cruise missiles that have been pummeling Ukrainian cities for the last several years are based, and they did about estimated $7 billion worth of damage, and took out estimated 34% of the aircraft used to carry those missiles. And Russia retaliated by sending 472 drones into Ukraine, the biggest drone attack of the war to date. And then on Tuesday, Ukraine attacked the Kerch Bridge, which goes from Russia to Crimea, Crimea Peninsula, and to carry troops and military equipment into the southern part of Ukraine. And they did not bring the bridge down. They severely damaged it, but it failed to bring it down. The weekend strike Ukraine was planning for well over a year, masterfully carried out. The strike on the bridge, they'd been planning for 2 or 3 months, underwater bombs placed there on the pillars, but were not able to bring it down. But that's the risk to the commodities, because 30% of the wheat that Russia exports and a good share of the oil that it exports comes through that Kerch Strait. So if they're able to bring down that bridge, if it actually blocks that strait for a period, that would tighten up supplies of commodities coming out of that commodity-rich region. So the commodities have been paying attention to that. Crude oil, in fact, has particularly been paying up attention to it. WTI pushing up against the $64 level again this morning, which has been chart resistance over the last 2 or 3 months for that market, something to keep an eye on. Also, the data showing that ocean exported oil going out of Iran down about 700,000 barrels per day from April down to May, dropping as the sanctions against it are being tightened by President Trump. So those factors helping to provide some support despite the increases in output by OPEC Plus overall. So that's a look at today's markets and what we're seeing happen. Overall, pretty mixed in the grain and oilseeds. We did see some increased money flow this week as we kind of see these geopolitical tensions in the Black Sea region that present some risks. And as we enter the month of June, a period that if there are going to be weather risks to production of the corn and soybean crops, we should start soon seeing that show up in the 2-week outlook in the forecast. Hasn't happened yet. It continues to be in the longer term outlook, but it really hasn't pulled forward into the 2-week outlook, but there are some signs it may do so. So we saw some end users getting some additional coverage and some speculators putting on some ownership. But that's today's look. Be sure to click like and subscribe if you want to continue to receive these updates from the trading floor. But otherwise, I hope you have a good weekend, and I'll be back with you next week.